Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500. So things are starting to get very interesting in the markets. We have switched from a slow grind up to a more volatile type of price action, which is definitely what we want to see as swing traders in the markets. And so far on this channel, we have been quite successful with this. We did predict the top with the divergence building on the MACD. We were looking at this uptrend line for a while, waiting for a potential break, which is exactly what we got, and had a nice impulsive sell-off all the way to our target here that, again, we were looking at for a while. And the last video I made was a video discussing a potential snapback rally. I think I made the video around right here, and we did get a nice snapback rally all the way to the resistance level that I pointed out in the video. So not to seem too confident or anything, but we have been quite successful with the way we've handled things on this channel. And that is normal. This is where traders can make more money when the markets start picking up some volatility. That's where patterns start appearing and the markets start to become a little bit more predictable. You get bigger price movements, and so you can make more profit in a shorter amount of time, which is definitely always something you want to see as a swing trader. Now let's clear the chart and discuss a little bit what we've seen in the past couple of days. So as I said, we reversed off of this resistance level that I pointed out in my last video, and we are currently sandwiched between the two levels that I discussed. So this is the first level right here, which corresponds to the top of this gap right here. You can see it better on the hourly chart, but you can see it here on the daily. There's a small gap here, and we're currently hovering above it, and it's acting as a support level. And same thing here, we've got the top of the gap right here, nice little gap on the daily chart, and it is acting as a resistance level. So in my opinion, these two levels are very important, and until we break one of these levels, it's very difficult to say where we're going to be heading next. I do have a preferred scenario, but obviously that cannot be 100% accurate. Now, the other thing that happened yesterday was the Feds made a rate cut, which definitely makes me more skeptical. I have to ask the question, why did the Fed do that when the market actually seemed to be recovering nicely from this drop that had no real fundamental reason behind it apart from maybe some panic with the coronavirus? Who knows how much that can affect the markets? But in my opinion, such a panic cannot cause enough damage to the stock market for the Fed to intervene. So that does definitely make me a little bit more bearish on the markets just because of the Fed. And in fact, the markets did react the same way. We got the Fed cut at the end of this nice green day, and the markets dropped after that. So now what's going to be happening in the next few days? What are my personal predictions? I have been thinking about two potential scenarios that may play out in the market, and I'm going to show you that right now. But before I do so, I would like to ask you to please leave a like and subscribe if you haven't already. It does take a little bit of time to make, plan, edit, and post these videos, so it can help me out a lot if you do leave a like. Now, the first scenario that I have in mind is that this is a dead cat bounce. So I think that's the most popular scenario amongst my subscribers. I saw on the comment section in my last video, and that is simply that this is the first wave of the sell-off, that this is the dead cat bounce, the recovering rally, and that when we zoom out a little bit, we're eventually going to see the next wave of sell-off. And this is actually typical of any large corrections in the market, just because nothing goes straight down in a straight line for double-digit corrections. You do need a period of consolidation before you start to head back down. And we saw this in 2018 here, a very similar pattern to what we're seeing potentially here is a first wave of solid sell-off, a recovery rally, and then the second wave of sell-off. And that's a very common pattern in corrections in the stock market. So in that case, I do want to be clear that we can see a little bit more upside. I think the maximum upside we can see is probably here, 3,200 point level before we start heading back down. And obviously we can reverse off of this 3,100 level, which is definitely the scenario I favor. I favor really a dead cat bounce all the way to here, and we start reversing back down all the way to the next support level. But again, the markets do like to trick people, so if we start breaking above this, people will start getting bullish, start investing, and that's when the markets will start selling off again, and retail investors will be the losers, as always. Now I'm going to clear this chart and show you the second scenario, and that would be that this is a one-time sell-off, and that this is actually a potential buying opportunity, and the markets will recover, that this was just a for-selling margin call panic, and that the markets will continue its way up slowly to all-time highs. Now, I think this scenario is very unlikely considering the magnitude of the sell-off and how impulsive it was. And having taken a look at the weekly chart, I can show you exactly why I think the first scenario, which is the bearish scenario, will play out. So let me jump on to the weekly chart right here and show you exactly what I'm talking about. And here I wanted to highlight a wedge pattern that we see on the weekly chart here. And this is one huge wedge pattern that's been in development since the beginning of 2018. Now we need three specific things for a wedge pattern to be confirmed, to actually play out. And the first thing is a trend line. So we have a trend line right here with many reactions. So this is a valid trend line. We've got the bottom here and reactions throughout. The second thing you need for a wedge pattern to play out is divergence. So we've got RSI divergence here. We've got a high and a higher high, and a high and a lower high on the RSI, and that shows that the momentum compared to what we've seen here has been slowing down, and that this is an indication of a potential reversal in the markets. And the last thing you need for a wedge pattern to be confirmed is an impulsive break, giving you that sell signal you need to go short. And frankly, we have all three things. We've got the check boxes all marked. So that is the main reason why I am favoring a more bearish scenario. And in that case, you can have a correction in time, as I always say, or a correction in price. And both things can play out with a wedge pattern. And so far, considering how impulsive this break has been, it seems like we're going to have a correction in price. And this is likely to be a very impulsive correction in the markets. Now, these wedge patterns can actually be measured, and you can have a specific targets for how they will play out, and you just take the widest part of the wedge measure that and then take the same distance from the break right here all the way to the nearest support level, which I noted down as here, and that would bring us all the way down here. Now obviously until we get there, a lot of things can happen and my opinion can change, but this is definitely a scenario that I can see playing out considering how impulsive the beginning has been. And I know for a fact that if we start coming back down and start uh, continuing through the support levels that are keeping us above here, well, the sell-offs are going to get more and more impulsive, and we're going to see some type of waterfall sell-off at one point bringing us all the way down here. Now again, that would only be in the case where this is not just a one-time sell-off and the markets don't continue on higher to make all-time highs. We do need more confirmation, more sell signals to confirm that we will see more downside. So that's about all I wanted to cover in this video. I hope you guys enjoyed. Make sure to leave a like and subscribe if you haven't already. In the meantime, good luck on your trading and see you next time.